Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We wouldn't go all in on QQQ. Trust us, we know a good bottom when we see one.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey everybody, welcome to the Laughing Stock. Johnny, how you doing?
Yeah, I'm doing good, but I see that you did not follow my advice and change from red to green.
I know, I gotta flip this conditional formatting. But I will say, then I would have GameStop in red, and that's not fair.
No, that is, you need to have some nuances, right? You need to know which one to change.
Yeah, that's true. I gotta be picky every day. I'll just adjust the ones I want.
Yeah.
That way I get the colors I like.
Yeah. No, we know a good bottom when we see one, right? And holy shit, sure. this day, and we just talked about before the stream. I think I know you did a little bit of investing during COVID, but I didn't. I started after around 21. I think I started with just paying attention to all of this stuff. I did some investing before, but not like we do now. And I think this has been the worst week I've experienced in terms of I haven't taken any positions or anything like that, but just watching.
Yeah, I haven't done anything actually. First week I managed to not do a single trade, and it was a good one to pick.
Yeah.
And what do you call it? Yeah, even just joking around, we were talking about GameStop, and I remember RK saying that, if Husband starts to outperform, that's when everyone should kind of sit back and think, and here we are. So I don't think I've ever seen it quite so red. It's kind of beautiful in a weird way. Yeah, but value brought it up too. I mean, like, this is a time that like devalue and stuff starts to come into play. You got to start to look through those names. The other thing too is like we don't know a lot. You and I were talking about this quickly before. Everybody now is apparently an economic genius after all this. Yep. No one could have called it, but they're all economic geniuses who are going to tell you that this is going to go down for more, or it's going to come right back, blah blah blah. You don't know. And we don't even know anyways, because they could pull these tariffs back or they could keep them. You know what I mean? Like, we just don't know. Like, no one knows what's going to happen here. So the one thing going forward is like, just treat it like you always have, Ironically, I just saw a post, and it was like the top, it was maybe like the top 20 people, and it was their net worth. And the only person who had made money right now? Buffett.
No.
Buffett's the only one who gained. So stick to the people who actually like show results and know what they're doing.
But don't you feel safe and secure when you have so many geniuses around you?
That's true. That's true. I should listen to the mob.
Yeah.
But once again, here's the portfolio. Nothing's happening. And,
No.
my year to date, I'm still up 2%. I'll take that.
Yeah, for sure.
I think from all-time highs, you said what? So we're down 17% on the S&P?
Yeah, 17, 18 on the SPX.
And
saw.
I think from my all-time high, I'm down only like 5%,
Yeah.
So, and I'm still up 2% for the year. And so
Yeah.
it does show why swing trading is a valuable strategy because, to be honest, you're out of the markets and you don't touch any of this time period. Like, you just don't have to worry about these kind of time periods because you won't be doing anything stupid during them anyways.
Yeah.
And it's funny, I was trying to find ways to like go through charts, like hold on, just to pull up sorry, we're looking at all kinds of stuff going into this, but excuse me. But like if you pull up even just the NASDAQ, for instance, and let's just zoom out to like, I don't know, just we'll just do 10 years. And like when you're trying to call, and I know you can't see the individual tickers here or like whatever you want to call them, candles, it doesn't matter. My point being is like if you're trying to find ways to sell out and avoid some of these large drawdowns, it's really hard because no matter how you do it mathematically, there's going to be times where you end up getting in late, you end up missing, you get out like too late, you get in too early, blah, 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 different things. And it's really tough to outperform the market by using any kind of those statistic type things. The two ways you can do it, I find is similar to like William O'Neill's type stuff. It's really looking at distribution, and it's following the narrative essentially. But it's tough to call these things. I mean, you could do what Buffett does too. Like, I actually wonder now. I'm thinking in hindsight, was Buffett smart enough to just know simply? Like everyone was wondering why he was selling Apple. Was he just simply thinking like, okay, if Trump says he's putting tariffs on things, he knows how that's going to affect it. I mean, let's be honest. Apple makes cheap phones because they do it in countries like China, where they take advantage of a population who's willing to work for next to nothing. And if tariffs come into play, like how that's going to affect the price of iPhones, and it's going to drop sales. Was he just thinking very simply and saying like, okay, this administration is saying they're going to put tariffs in place, I should start to pull out of Apple? I don't know if it was that or not, but I mean, what a brilliant insight that doesn't take a genius to figure out.
Yeah.
But my point being with swing trading is instead of trying to go through it from that perspective and figure out where you want to get out and get in, you don't have to worry about it because you just simply follow some basic numbers and you'll know if you should be swing trading or not. And we're not even that far into it, and like it was obvious, I feel like, to us, and I'm sure anybody who's looking at it from that perspective. And then the other side of the coin is now what a great time to look for value.
Yeah.
You know what I mean?
Yeah. Definitely. And I think I texted you this week, like, this is one of the sides that I love about swing trading also. It's like, I haven't thought about the market almost this week. I just saw which direction is going on my phone, and then I'm like, okay, I know there's not going to be many breakouts. There's not going to be many setups, and definitely not a lot of stocks are going to hold. So I just been doing different things this week, and I'm fine with it.
Same.
But I'm also, like I've said 100 times, I'm fully aware that when things turns after a while here, we have to deliver also to say that swing trading is the style I want to go for. But I'm very I think this is a good side of it, that if I was in Alto and all that stuff now, I would probably be holding through it, if I still had the belief and stuff like that in the deep value place. I think I would just have to hold through this period if you didn't sell out already.
Mm-hmm. Yeah, no, I agree.
Which a lot of
just
people
pulled up
are
the
doing.
insiders just because I feel like this is going to be a good place to start watching. Looking for when insiders are buying here, because that's going to be a clear tell on CEOs and other people in the companies that are like, oh my God, we got thrown out with the market. This is a good time to start investing. Like, I just noticed, on Local Bounty up 68%, and there's insider buying right here.
Yeah.
Like, that's something to watch for. This is where you can probably really take advantage of some things. I don't know how much of this actually was a raise in this price here because it's a small company, but either way.
But I see Ring there. I see GTE. Familiar names, you know.
Yeah, oh yeah. There's definitely gonna be familiar names. I gotta go through stuff, but yeah, you're gonna see stuff pop up, especially in deep value type names. It's been a while since I really went through my deep value stuff, so I'm gonna have to kind of reallocate. I know that kind of sucks because this is like the time you should be on top of it, but I have a lot of different ways now. I think I could narrow down the numbers and what I'm going to be looking at pretty quickly. So I am going to take kind of that approach to some of those names, and I may actually do some longer term holds here, but I am going to watch the markets here to kind of see how things go. With the level that the tariffs put on and then just the pessimistic attitude towards it, I can see the market sell off a little bit more.
Yeah, same.
Who knows how long this will go on in kind of the honestly, it's a big change in the macro environment, and it's going to take a while before any kind of consumers have confidence in what's going on from here. So I think this will continue for a little bit. I'm not probably going to hop even into deep value just yet. I'm gonna start figuring out some of the names I'm interested in, and kind of take it from there.
Try to focus a bit on a few names, and I saw Mark Cuban was tweeting out something like to warn the consumer a bit, like you should start to plan a little bit for some rough times, you know. So, and it's like, you know, who knows? Like we just have to wait. See, I'm thinking the same as you. I think this will take some time to settle down. Everyone needs to understand what's where this all lands, and I'm sure before we even understand where it's going to land, we have gotten some changes already. You know, if there's something we have seen in the past also, is that Trump has changed the tariffs a bit, you know, pretty quickly after, and just stuff like that. And this was a bit different, of course, but we just need to go week by week, I think. And in that time, I think it will be smart to try to narrow down on a few value plays, because that's where we are right now. And we're going to get a lot of signs, a lot of clues when the market starts to. We joked in the intro, right, that this is a bottom, but I'm not sure about it. And we will get some clues when it starts to turn around, and you will probably have time to jump into swing trading again then. Guess how many names I had in my weekly movers this week, Dane?
How many?
I usually get what around 100 to maybe 400 on a bad day. I had 2,455 this week.
Solid numbers.
Yeah,
it's one of those things in you know, there's going to be countries who are immediately going to try to work with Trump and essentially work on these tariffs so that, you know, it opens the trade. There's going to be other ones who hold out or maybe even punish America back. So those ones are going to be struggling. But no matter what, if you do reciprocal tariffs against the United States, just remember, too, that goes both ways. Like, just like people are complaining that Trump's putting them in place because it's going to harm the economic trade relationship. If it turns into a trade war, it's bad for both parties. So coming to an agreement on any of these things is best case scenario for anybody. So we'll see how often that happens. Number two.
I saw Moscow's also out now saying that his hope was to have a trade like a
zero tariff between the
tariff between Europe and USA. That's what he was hoping the goal would be, you know.
Yeah, and we'll have to see. You know, it's going to definitely vary by country, and because the EU is its own thing in of itself, we'll see how they end up responding as a whole. You know, and maybe individual countries in Europe decide to work with Trump, and maybe that will make other countries that would be more hesitant to open their eyes possibly to it. I don't know. I'm not saying this could be long drawn out and it might not work out like that. But the other point I was sorry, I was just thinking of something else too. I believe and mind you, I'm reading news as things go, so I don't know it's 100% accurate, but I think Congress just stopped the tariffs between the US and Canada. So there's also a chance that Congress plays a big role here and shuts some of these tariffs down. So they're kind of, it won't affect anything. But the third point that I'd like to make is that Bessett's the one that's in charge of a lot of this. He's the economic advisor, you know, in terms of like where Trump's coming from this. He's an extremely smart guy. Okay.
Yeah, I was gonna ask you. Like, I don't know anything about him.
He used to work with like Ray Dalio and Soros and stuff. You know, like he's a hedge fund guy. He's not like some, you know, nobody. And I've heard a lot. I don't know what's all true. You know, they have to restructure. They're trying to get interest rates down because America has to restructure almost $10 trillion in debt. So I will say, and I've thought this for a long time. You know, Buffett wrote about this a long time ago, saying that America's trade deficits are going to like kind of slowly pull the rug out from underneath us, and you know, it's going to essentially keep us in debt. Like, you know, we're just spending debt to basically stay afloat. And you can't do that for forever. So we do have to have some kind of change. Now, I'm not saying I know this is the right kind of change or not. Like, you can be as critical of Trump and these tariffs as you want to be. I don't really care about that. But I do agree with the fact that, I've thought whether it's Elon and Trump and how this whole Doge thing works out and us trying to cut money in all over places, I'm not saying it's the right way to go about it, but I'm saying we do need to do something. You know, we can't, America could not just stay on this path of debt. It will run out. I was playing around with AI and stuff, and I was asking how long until America at the current level of spending would reach a point where the interest gets so expensive that we just basically couldn't pay for it, and we'd kind of turn into like an economic death spiral. And even the AI numbers were like, at this rate, between 2040 and 2045 is when America would no longer be able to pull any of the levers to basically get out of this situation.
Yeah.
And it said if there was any kind of calamity that occurred in the meantime, that could drop that down to 2030 to 2035.
Which is highly likely in so many years.
Well, it had just said basically in the last 30 years, there's been one every 10 years, which means if, you know, there's the great financial crisis, COVID. So, and I'm talking when they basically print money to get out of the holes that they put themselves in. So, if that was to occur, it would shave it down to 2035, which means America could essentially start to not default, but run out of ways to get out of this without really causing economic harm to itself and really putting ourselves in a tough position. So once again, I'm not saying that it's important or that Trump and Elon are doing it the right way. You can argue about that and how you feel about that, but I am saying there has to be something done. So I agree with Bassett and those guys at least saying that we need to try something. So we'll see where we go from here. But, you know, essentially America's been running like the spoiled kid with the credit card allowance. And, you know, we're starting to reach that max budget. And we got to do something, you know. And if America's economy really crashed, I mean, it would be bad for the entire world, not just America.
Yeah.
So...
Hey, Dayne Value is in the chat here. He's saying, hey guys, I was just about to head to sleep. We'll catch the whole stream tomorrow. Crazy few days. I see option premiums are up on the volatility. I'm considering selling puts on value stocks I want.
On selling puts, interesting thought. I mean, option premiums are going to be really high right now just because of the volatility. So selling options, actually, it's not a bad idea. Normally, I would think that's not a smart move, but I guess it's kind of the opposite because normally selling is more dangerous because the option volatility is low and you can make so much on the other side. I would say, though, you're also assuming, too, that this market wouldn't continue down too much, which it could go down quite a bit, you know. Like I said, this is the thing. The market is a voting machine in the meantime. That's what Buffett and everybody has always said. So you have to remember, too, if the overall attitude is so pessimistic that, you know, it drives this down another 10-15%, not because it's economically sound, just because people get nervous and, you know, when people run, they all run. So we'll see what comes of it. My feeling here is not to do anything too rash. You know, you could sell some puts. Yeah. But you know, I wouldn't do like a large chunk of your portfolio here. If you just want to hedge a little bit by doing something like that for value, I totally agree. That's probably a sound move here.
But then value he after this NUTX play he has the money.
Yeah, I saw he said he sold a huge chunk of his position. So I don't blame you, man. I wonder what your final X was on your original purchase. That's got to be awesome.
I was just messing. Congratulations! I congratulated you in the Discord, but on the stream too. Value that was a sick play you had there from the very beginning. So very well done. Impressive that you held also and added on the way up, right? So
yeah, perfectly played.
Like a perfect play almost.
Yeah, I would totally agree. Kudos, man.
Yeah.
So point being from here is we don't have to worry about swing trading too much here. What I did create, and I was showing value this, and honestly, I'm going to pull it up on here because I really don't care if my screen doesn't fail because it looked, oh, there it goes. Okay, so I created a market strength, like kind of like an index. It's just a way for me to look at different things, and you don't really have to worry about what a lot of this is. This is just different ways I screen and different monthly percentages and stocks that are up and down and kind of like a win rate for actual swing trading. And this is just a way for me to kind of keep tabs on the market. And going forward, I'm looking at all these things as averages, which I don't know, my conditional formatting is not working on all these, but whatever, it doesn't matter. But point being is that it's a way to just kind of like start to learn the averages of what's a good time period, what's a bad time period. Obviously, this is a bad time period. And I'm actually kind of happy that I'm starting to collect data right now because this is a good time to have like real bearish data in this. So going forward, my conditional formatting here is always going to be based off just like the entire column essentially. And I'll probably make a new one of these each year, just like kind of restart fresh each year with stuff. But
yeah.
Just thinking, it's going to be interesting to follow this and see how things go. And then this will give me an idea of really good periods when we're in average periods. So like, for instance, this is like stocks that are up 4 to 7% for the day. And not all stocks, it's a little bit more honed into the kind of criteria that I'm looking at. Failed breakouts, breakouts that are occurring, breakouts that last like for at least 3 days. And then this is some different categories here on like how many stocks are up for a month, 3 months, 6 months, over a year, and over a year and a half. And that just kind of gives you an idea of like how strong we are into things. And as these numbers start to turn, hopefully it gives me a good idea of when swing trading is going to come back into something plausible to do. So as of right now, this is all I'm doing. At the end of the day, I go through, I just check my numbers real quick and plug them in here, and that's like my day of investing. So it's pretty easy. I don't even look at the market open. I didn't have to look at all. Like I pulled it up midday on Friday, and I was like, yep, it's down another 4 or 5%. I was like, wow. Yeah. But didn't care at all because I'm on the sidelines. So I will say, I do love that about the strategy.
Yeah, for sure.
And the other thing too, and this just goes to show why value is such a great strategy as well. Like for instance, like let's just pull up NUTX here for a second, just to do it. So I mean, this is the sell-off that occurred in NUTX. It went from 76 to 71, and this is on 2 of the worst days we've seen in a long time. So value over here, who's probably, who knows, this cost average probably around like $10, $5. I don't know what it's at, but it's low. When you're up 10 times, who cares if it drops a few dollars in the long run and you decide to start to sell out there because you're like, all right, I'm calling it here. I'm starting to feel some weakness, and also how high can some of these things go? I mean, even the volume here. I mean, the volume on these 2 days where it had the great earnings, even the sell-off here is not that strong. Just looking at it from
15% on that, right?
Yeah, some crazy amount. But point being is that's the other thing that makes value so great is because you're holding for a longer time period. You're not so worried about like a couple days in the market that aren't good, and you're focused on quality companies. Yeah. I to be honest, the more I think about NUTX, the more America really does need to have these smaller hospitals. We've gotten towards this like system here where we have really big hospitals and it's really expensive. They're not the most efficient thing. And the problem is a huge chunk of America isn't served well because we only have these big hospitals now. A lot of the rural ones have kind of shut down. So this system here is starting to work. It's a way to have smaller hospitals that are profitable, that can kind of be, you know, spread throughout the country. So who knows? I mean, this is a great example of coming up with a way to solve a problem that America has through a public company, which is rare. You know, I mean, it's not rare in the fact that, like, I'm just saying it hasn't happened yet. So it's nice to see something like this occurring. So
Yeah.
But once again, like I said, if you're up 10x, you know, and you decide to take some gains here, you know, I don't blame you.
No, that was.
And then, you know, two things going forward. You know, I think at this point, the way you can kind of play value here is one of two ways. You can play the Warren Buffett style of value, which is where I'm going to be looking at stuff actually towards, it's like stuff that's still strong, that's like bigger companies essentially, or has, you know, or stuff that's dropped that was really strong recently. And the reason why that's super important is because you're looking at basically, what do you call it? Stuff that's going to probably recover. You know, I mean, these businesses aren't going to die. You know, these are big, strong companies. And then the exact opposite is going to be the stuff that's at the very bottom, you know, and that's where the deep value side will come in. And that's the other side of value, is where you're going to have to kind of search through. It's tough because, like, on this list, I think I had 2,000, like you said, it was like 2,000 names to look at. So it's basically half the market almost, or a third of the market is you're going to want to be looking at here. And it's not saying you have to go into anything, but, you know, that's why I'm going to focus on insider buying. Looking at things with interesting volume, stuff at true 52-week lows, and we'll see if there's anything down there that can survive. Like, for instance, you were joking around, we pulled up Mult here. This is one you would probably not want to get in at this time. When Mult drops to 8 cents and has 350 million shares sold during this sellout here, that's the end. That's the end for this company. There's no one left here. It might get a dead cat bounce, but there's not much going on here anymore.
No.
We were joking around saying that this guy's going to get the pardon too, from similar to Nikola. So I can't remember the guy who owns this, but it's kind of a similar thing in terms of him diluting and just kind of keep pushing for this thing to stay alive. Who knows? This will probably be like the next 1,000 bagger, and it'll recover from here to $80.
Yeah.
But we'll see. Who knows? But yeah, so really at this point, the next thing this is kind of become the work period. Well, while the markets are down here, just have to start searching through for stuff.
Yeah.
Where would you, how would you look at this in terms of trying to narrow down your focus and find value?
I was thinking, I haven't, you know, I had my tracker sheet and all that. And I've still kept an eye on value plays, even though on the stream we do the swing trading, but of course less, because I've also had to read a lot about swing trading and watch videos and stuff. So just haven't had the same time, but I've kept an eye out, and I think I would start to go through my tracker list, because they have already passed an initial filter, and just start. I don't know how many names I have there, 200 or something. And then I would start from there and look at the fundamentals again. And I mentioned to you, right, the PBF is down to $15 now. That would be interesting to pull up the fundamentals and have a look at it again, I think. And you know, I saw some insider buys there in GTE, for example. Like, I think I would start there with some familiar names, but also continue to screen for stuff that are close to 52-week low. But it's going to be so many right now, so it's going to be hard to go through them all.
Oops, that's not what I want to do. Yeah, I think, man, this is running super slow right now with everything going on here.
Yeah.
I don't even know if I can get this to come back up. There it goes. Yeah, I think what I'm gonna do, it's gonna be some. I'm probably gonna need one long day to get through this, but definitely be watching insider buying, that kind of thing. The next reports that come out from the funds and stuff like that, see what they're buying into. Murray's gonna be an interesting one to follow this kind of time.
Yeah.
And then I'm probably going to go through like all 2,000 of those charts and kind of look at stuff that's historically been high and, you know, is down, especially if it's down recently, like in the past, like little bit here. If this last month is what's actually pushed it down into low territories. Not stuff that's just been on that steady decline for forever, because a lot of those names are, this might be a tough time period for those companies, because those companies are the ones that are going to struggle really hard in this time period.
But it would be a bit different focus, I think, when you go through the companies now, in terms of you should look at the stuff that we already have done on the streams and stuff, but maybe you have a, you know, with the tariffs and all that, they're going to struggle with some cash generation, most likely, and maybe even more important than before. You shouldn't, maybe that's some of the things that you should look for in a period like this, like a very good and strong balance sheet, and not take those risky stuff that we maybe have done before on the streams.
Yeah, no, I think that's the smartest way to do it is, you know, it depends how you run your portfolio. I think if you were going to go into stuff that looks ugly and is somewhat higher risk, taking really small position sizes. This is actually very similar to what RK did when the COVID drop happened. You know, you're taking half size position, like 0.5% size positions, and like over 100 names. And the goal would be that, yes, probably, I don't know, even 15 to 20% of those could go bankrupt, but the other 80% all could, you know, triple, you know, quadruple, 10 baggers. There's going to be all kinds of names in there that do really, you know, that have phenomenal comebacks during something like this. So my goal is at least to get through as many names as possible, and just definitely watch cash flows, definitely look for balance sheets. Anybody who's got debt that's coming up, I mean, the interest rates are so high right now, and not high historically, but high in terms of like the past, you know, 20 years. So people who have to restructure their debt, like they're not going to make it. They're not going to make it right now. They're going to get, if they have to restructure now and they're already not generating cash or whatnot, like they're going to die. So,
but also maybe look at stuff if management or something managed to, you know, renegotiate some debt or something, let's say in November around the election time or something, maybe that's also a strong sign now that they were very smart by doing it that early, and you know, look at the management team a bit more also.
Yeah, if they already got it done, that's definitely that's a good thing, because that means even in the higher interest rate environment, someone had the confidence in them to say like, yeah, we'll restructure your debt for you. I'm just saying right now, I doubt many banks you can go to right now in this environment and say like, oh, I want to restructure our debt, and like if you don't have a somewhat okay balance sheet, that they're going to be like, yeah, this seems like a smart move for us. You know, like they're not going to do that, because bankruptcy risk is going to be, it could be high. You know, the thing is with these tariffs, no matter what, prices are going to go up. You know, like I said, the immediate effect of inflation from this is going to be that the price of goods are going to go up. The goal, I hope, would be that in the long term, this inflation will finally really slow down, and that, you know, it would start to help out America's interest, you know, that we have to pay on this debt, and that hopefully it increases. I don't know, it better pull in manufacturing and stuff back in here or something, because that's the only way that this works out and mathematically. But some of these names, I mean, prices are going to go up, and it's going to struggle to see people afford and pay for the same amount of things as they were before. Now, I think we were kind of headed in that direction no matter what. So like I said, it's not like I'm being totally critical of this choice. Whether we should have jumped at this quick of a level to do it, I don't know. But I whatever, however it works. I mean, I get it when you're in the economy, or when you're when you're elected, you only have so many years to do this stuff. You know, so either you're going to do it or you're not.
Would you have a extra close focus on certain sectors in going forward if you go more deep value style?
I think that's really smart. I just don't know yet which sectors I would focus on. So I'll have to kind of do some thought on that, you know, on where to kind of look. And honestly, I might start taking just kind of the example of, I was just saying, I was just looking at my on deck list. I got still 370 names. So this is probably be the list that I go through first for value is these 370 names. Which I have it in CSV over on this column, so I can just pull these into stock charts and just kind of fly through some of these names to see what looks good just from a quick glance.
Yeah.
But, and I also have my good company list here too. So like this is a nice one. Sorry, this is so zoomed in, but these are ones that I liked that will probably be interesting to me. But, and here actually, you know what, just because I don't really care if you guys see my list here. Just zoom in so you guys can see this. Now this has been a while since I updated any of this, so don't just think you can buy these companies and you're going to be okay. You know, some of these names are bankrupt.
So, what did Snoop? We skipped through what Snoop said, Dane. He said market condition can change drastically, right?
Yes.
Or rapidly, or whatever you.
Yeah, rapidly.
Yeah.
Don't invest necessarily just on that because conditions can change. But so I think looking at sectors. But my last point was going to be that, you know, similar to where I don't decide what the market's going to do, I watch what the market does. I think it's kind of a smart approach in like if I'm trying to figure out what sectors are working, like let's see what sectors collapse. Let's see what sectors stay strong. I think if you're looking in the middle ground there, it's probably not going to be great because it's going to not have a great recovery, but it's not down all that much. The ones that are really got hit hard, those are ones where there's going to be all kinds of things like good companies in those sectors are going to be the ones that are, you know, the baby's thrown out with the bathwater. Those are going to be good companies to look into. And then the ones that show strength during this period, those are the other ones that are going to be really ones to kind of watch and possibly take. So, but like I said, it's both sides of this, the spectrum of value. And then, you know, I guess if you want to just throw in the final chunk of that, if you're more of the growth side investor, there's still areas that are going to be strong no matter what. AI growth, quantum computing growth, you know, stuff of the future, things that, you know, have probably really pulled back. I bet you all the quantum names right now are in the bucket because, mind you, none of them are profitable yet because it's just all research. You know, that's none of it's been proven. But who knows, in the next 5 to 10 years, we all know those names could take off because quantum computing is probably going to be the next big change towards everything. So if you're looking at growth, those are the kind of, it's more narrative based that I'd be looking for growth because the numbers are going to be hard to kind of calculate on your own here. But yeah, I guess those are the 4 like pillars that I would be looking into. And I guess if you wanted to say macro wise, I'm not really going to invest in foreign companies just because I just don't have the data for it well. But also there's going to be countries that probably really benefit from these trades on the whole global sphere and ones that don't. So, that's another spot you could look in.
I have my sheet where I have grouped like themes and stuff, or groups. They all perform like shit in my sheet, but it's a bit interesting now to see. And don't get me wrong, it's still I have a scoring system and everything has 0 right now. But the top performers, if you can call it that, with still a low score, is batteries and EVs right now. So I thought that was a bit interesting to see.
Well, it's interesting too. I mean, you know, Tesla's kind of the oddball example of where they just have like this hatred towards Tesla now. So it's kind of fallen out of like, you know, being like this held up on like the pillar it's been on for so long. And now it's kind of hated by a huge swath of people just kind of politically. Why? And, but I agree. I think EV is still a strong market. I still think that's part of the future. And I think battery technology, no matter what, is going to be super important. You know, for every possible thing you can think of, having better battery sources is only going to be a net positive. So,
Yeah.
I'm trying to think of what was the company. I've liked them and I've gone into them a few times. They're kind of all over the place. But it's a battery company that. What the heck is their name? I can't think of it.
MVST.
No. I thought it starts with a B. I thought, but I can't. I'm drawing a blank.
ABAT maybe.
No.
No.
Yeah, I'll think of it as we're going here instead of trying to sit here and think of it right now.
Yeah.
But yeah, I mean, all those different things are things to look into.
Yeah. I'm a bit also excited to see the performance of that sheet I just talked about. I haven't showed it on stream. It's not complete. I need to add more things, and I don't want to also, on the stream, maybe I have a high score and someone misinterpret it. I'm a bit careful with that.
Yeah, and as always, guys, don't invest in anything you see on here just because you see that I had it highly. Like I said, stuff's out of date, stuff's not.
Yeah.
Or I'm thinking of it in a certain way. I would only buy it at a certain point. So just because you see something on here listed, like you see my stuff of good companies, make sure you can look through those names and do your own research. But don't just think like, okay, that's a good list, I should buy those.
Yeah. Because we make mistakes. So
and like I said, stuff just changes so fast.
It changes, yeah.
That's what Snoop says. You got to believe in Snoop.
Yeah, listen to him. But it's going to be interesting to see how the sheet will perform during all of this time, and if I can start to trust it myself, and how much conviction I can have in things.
Yeah, I'm trying to think of a way to break down some of these names to. See, like for instance, like just trying to think about like what would I look for in charts. Like this is a good one. This one's just steadily been at like $5 for the entire year, and then now in the past like week or two, it's dropped down to $1.50. Now maybe something, maybe this was earnings or something, you know what I mean, or whatever, and it's fallen off a cliff. But I'm just saying this is the kind of chart where if something was trading in this range for a long time period, and all of a sudden, with not a ton of volume, has just totally sold off here. This is the kind of name I'm probably going to start to pull in, just because I'm just going to want to say, like, did something actually change here, or is this just because the market's like out of everything that's risk, that they're all just out of these names? And that way I can just get a list going. And if, let's say, who knows, let's say that like in the next week or two, like we're talking about the European Union and whatnot, let's say that the European Union and like China and like maybe like two other big players are like, you know what, let's just do all 0% tariffs across the board, all countries, and then that way the trade's just totally fair, no one can argue anything. And all of a sudden the stock market rips like 10%, in like a day. In that crazy scenario, it would be nice to have a bunch of these names, because those are the names that are going to fly right back up to that number, like that $5 range, and you can get some crazy bounce back in no time.
Yeah.
Worst case scenario is they print more money. If the U.S. prints more money to get us out of this hole like they did with COVID, I give up, because that is the end of everything at that point. We've printed money every time we run into a problem, and I just wonder how long you can keep pulling that card before it fails. Yeah. But who knows? Maybe they'll print money and everything just recovers, and then we continue to create this wealth gap.
Yeah.
But.
And then, of course, you want to be in some names already. That's what it's about. But
that's the thing, is the assets will become, the assets are where all that money will go.
Yeah.
So.
Hey,
we'll see.
Dayne, Voxy is in the chat from Discord also. Hey, Voxy. Hey, guys, I'm actually up early on a Sunday. Nice.
Welcome.
Yeah, welcome.
Yeah, sometimes it's a bit of a struggle for me to get up quite so early. But I push myself to make sure I get on here. We used to be doing the stream 3 times a week. It's so hard now with a family. I trust me, guys. I wish I could still do another stream, and I wish I could do as much time as I used to have. Like literally probably my biggest reason that swing trading appeals to me right now is just the time difference between that and value investing.
Yeah, for sure.
Value investing is a lot of work in terms of you could just endlessly learn about this stuff. I mean, there's just so much to go over and to learn when you're doing value, where once you have the idea down for swing trading, it's kind of like a lazy style in terms of how much work you need to put in. You just need to be quick and make strong choices. But you're just playing statistics. So it's very different.
Yeah.
But no, you know what? This is what I need to do. Like, I'm already looking at these names. Like, this is market cap 148. I'm not buying this. I'm not buying a company that's 148 billion dollars. Even, don't get me wrong, Adobe could get back up to like $500, but like, you know, when all these names are down so much, you know, this is where you should be looking for 5 baggers, you know, 10 baggers, not something that may double. You know, that's not, you know, to me, that's not worth your while. So I'm gonna actually, I'm gonna make sure I change that in my advanced scan workbench. It's one thing I love about stock charts is you can 52-week lows. You can put in all kinds of stuff like, and market cap is trying to think how high I want the market cap to go. I think I'll do less than 5.
Yeah, I was gonna say 5. 5, 6, I think is good now.
And type is stock, and group is not ETF. And then I guess on the other side of things, just so I don't get like really tiny stuff, is just greater than 10. So like if I run a scan like this for 52-week lows, something I messed up because that didn't pull up anything. Let me get rid of this. Okay, 330 some name. Okay, like 340 names is a little bit easier to get through.
Yeah.
I'll use this for now.
Vox is saying, yeah, 100% value and swing are kind of related though. Value is long-term, swing is short-term, but you still look at value when you look at the swing trade. That's how the swing happens. Yeah, those are what, you know, Kulamagi and them all say, that the best performance for them are when everything comes together, right, Dayne?
Yeah, and I've always said that they're kind of an interesting dichotomy to each other because they both seem to perform kind of somewhat in the same time period. Sorry, I'm just trying to find this stupid name here. Oh, here we go. So yeah, they're essentially the opposite of each other in a weird way, but they also have a ton of similarities, and I always see the same kind of ideas come to play, whether I'm looking at value or whether I'm looking at, what do you call it? See, why? This is still 29 billion. Did I type that? Should it be 500? Is that what this should be?
Probably then. Gave you a lot more.
Wait a second. I'm an idiot. Wait, that's still 900 names? Are these at least smaller names? Either way, just ignore what I'm doing because I just want to have this in place here when I get my chance later to start going through these names. These must be smaller companies.
But it's true, Voxy, and you know, that's why we get a bit excited also when we see a value name where the setup is, you know, apparent and it has, we already know it has the fundamentals going for it. So
yeah, because
those are the ones you want.
You know, we've talked about it with a ton of different companies. If you're watching things, value, you're essentially getting in some time of you're getting in towards like the base. You know, you're not getting in towards some kind of breakout type period, and you're going to hold it for a little bit longer and get a much larger return over time. which should balance about out the same as if you're swing trading on those areas where the volatility and the volume finally pushes it out of a range, and you're just capturing those smaller moves. So, you know, with swing trading, you might capture 4 or 5 of the bigger moves, and it only takes you a couple of days or weeks to capture most of that. Where when you're doing like value plays, yeah, you might hold it for a year or two, but you also got a 10 bagger out of it, you know? So if you did the math, the percentage gain on it either way is about the same. But like to your point, Voxy, is that, yeah, those are the names that had some kind of value, some kind of special narrative to the business that turned it around, and or it's just thrown out because everything sells off in these time periods. All right, here we go. These are, yeah, but now I got the smaller market caps. Okay, so now I got to adjust this. Market cap is now greater than 10. So that's 700 names. Yeah, okay, this is better. So still 700 names to go through. I mean, it's going to take me a little bit to just scroll through those, but hopefully based on some of the charts, I can get that number down, that number narrowed down to maybe a few hundred, and then start looking at those, pulling them in. You know, that's the thing with value, is most of the names you can look at pretty quick and see, you know, how's the balance sheet, how's the cash generation, and if those are interesting, if there's insider buying, if there's any kind of whales that are holding it, those are the kind of things that you can hone right in on, and hopefully I can get that name down to a lot less. In my one portfolio, I still do a lot more value type investing. It's usually more wonderful businesses in that one. And like I said, I don't really sell on those ones. They just kind of a long-term hold. But maybe I'll throw some into that one specifically. I might put some in this portfolio too. I had said that I wanted to do a few names, although this is the time period where you might want to do a lot of small names and just do really small percentages of it.
Dayne, I noticed the USEG is around $1 now.
Yeah, I'm sure that sold off with everything.
It went down like 18% the last 2 days.
Yeah, but I mean, look at this compared to, like the Nasdaq, for instance. It follows it.
Yeah, but that's why my point is like starting to, if you're gonna put, you can put a little bit of money into that. I'm not saying anyone should do it, but the thinking is like, you know.
Yeah, and remember, USEG has a no debt, and they're pivoting towards a brand new business that's going to be, on paper, more profitable than the oil business. And the reason this one's selling off with the markets is because the energy industry's gotten hit hard. But this is pivoting away from oil and gas and going towards helium. So I still think that most people probably don't even know what this is. I use what's the app? StockTwits. And on there, it's hysterical because I have USEG on my list that I follow. And so many people point out and talk about USEG being an oil company. And I'm like, did they not know it's pivoting to helium? So I know most people don't even look or care. They just see it's an oil company and they don't know any more than that. But yeah, I think it's interesting down here for sure. Because it's I got liquidation value of this at like 80 some cents.
Yeah.
So we're getting pretty close to liquidation value here on this company.
Which it was trading at in September 24.
Right, and I mean, you can see that even on this bigger drop here, it hit 81 cents and then flung back up, and it's got down into the mid 80 range, but never pushed below that. And that's because really it never should. I mean, there's no reason anybody who's watching anything, if you see this name get down that low, I mean, it's a clear buy. You know, you would make money if it sold itself off.
If it drops below $1, you kind of want the CEO to buy a bit of a bigger chunk, though, wouldn't you?
Yeah, I mean, he's consistently bought that. You know, he buys like 1,000 shares all the time. Yeah, but
the last one was like end of March, so it's been a while now. Not that he has a history of buying regularly, you know, but I mean, at some point he has bought a lot from $1 to $2, and if it drops below, you know, one maybe a bigger chunk would be a confidence boost.
Yeah, I'm not sure. And it's interesting how it's labeled on here because, like, if you look, so I'm just, it shows how many he's owned. He went from 836 to 1.2, so I'm assuming there was some kind of options there. And then there's 100,000 less here, but then he bought 1,000 more. So I don't know. These numbers are kind of weird here.
Yeah.
But either way, I mean, he's still buying down in this range. And he's obviously bought much higher than this as well.
Yeah.
But, I mean, he also, you know, way back here was buying at 98 cents. So I'm sure his cost basis is quite low.
Yeah, I think it is still so. But it's just like, you know, 1,000 shares. It does add up, though. I see the... You remember that company VOXX, and they had the CEO. He was buying a little bit more than this, but he was also buying regularly.
Yeah, because I swung trade Vox somewhere in here. One of these two. Yeah. I think it was this one.
Yeah. I think he ended up selling the company to someone else, though. That guy.
Yeah. No, this whole period there is when the company finally. But interesting nonetheless. I mean.
Yeah. Voxy is saying, yeah, when there is a correction like we have now, it's a good time to build a list of value options. Yeah. I
had just brought up to Johnny that in terms of actual percentages being down, if you look historically over the past 100 years, this has only happened 8 other times we've had this big of a correction. So I'm not saying it can't go lower than here, but if you think about it, we're down, what did you say, 18, 17% from the S&P's high? So
yeah, around there.
Right there, if you're buying here, anything, you're getting a 17% gain on wherever people just were buying. And it will always go back above it. Always. It's always going to go back above it. No matter what happens right now, unless there's some kind of crazy nuclear war. It's the only thing that would adjust. But
then you don't need the money anyways.
What'd you say?
If that's the case, you don't need the money anyways.
Right, and that's true. Yeah, it doesn't matter. So you can count that narrative out no matter what, because it doesn't matter. Yeah. The markets won't. No one cares if your money's not worth anything. It doesn't matter anyways. So, you know, the one thing I can say is, like, during any of these kind of drops, like, it really should be an exciting time period, and I think that's just one thing that it shows whether you've been doing this for a long time or not. You know, I get it if you're like a hedge fund and like this isn't built into your model and you're full on panicking right now because you weren't anticipating, you know, a 15% drop. But, you know, that's how hedge funds get blown up. You know, they use leverage and stuff at the wrong time and something like this occurs. And, you know, it's not like this administration didn't say they were going to put tariffs in place.
No, that's what surprised me a bit. Like, he's doing exactly what he said.
Right. So, like, if you didn't take him at his word, I mean, that's kind of your bad. You know, trust me, I thought about pulling my stuff out of my other portfolios, and I was like, you know what, just because, you know, I did see a few trends in terms of getting out when we crossed below the 200-day moving averages, that kind of thing. And I'm talking for a few days in a row. So, like, usually, like, somewhere in here technically is where I could have gotten out, was around 1800. That was a signal I've had that I saw, and you would outperform the markets if you did that. And then you had to follow some rules to get back in. And the reason I didn't do it is because there is times where you would be buying and selling a lot because of the way it works. And I just didn't want to take on that headache. I just don't have the time to watch those portfolios like that. So not that it's hard to do. It's just something I don't want to do. So I held those in here, and I'm just going to hold them. I don't care. And those ones, you know, I'll add money in to those accounts, and I'll keep buying down here. So whatever, it'll bring my cost basis down on these things. And those ones are usually indexed. I have 1 or 2 in mutual funds, that kind of thing. And those ones, like, I don't care, you know, I don't, because it's going to recover. It will recover. I don't care if they're down, you know, it's not a big deal, but I could have sold out on those ones. And in hindsight, it would have been the right move, but I just didn't have the confidence at the time to do it. But, you know, the reason why in my mind is I was like, yeah, I don't know. I mean, if he really puts the tariffs in place, it should crash the market. And you know, it's not like I'm a genius figuring that out. There's a bunch of people who knew that, but you know, most of the guys that I listen to that really know what they're talking about are the ones who react as the market does. They don't react first.
Yeah. But we talked about it just the couple of days before he put that news out, like 2nd of April, right? Because we looked at the S&P and it was going, it had some signals that you could interpret as a little bit of bullish signal, but it was just the lack of volume that gave everything away a bit, right?
Yeah,
It
in
was
terms
just
of that little
apparent that
bounce.
people were gambling a bit that the news would be a little bit better than they were expecting or something like that.
Yeah.
But it wasn't any strong confidence here. The more I looked at it, the more it was apparent that this is just people who take a chance.
Yeah, and I mean the only painful part in all of this is if you're someone who needs the money at some point, you know, like you have to take it out.
Yeah.
You know, but you should never be investing that way. You know, I get it if you're a big fund and people pull the money out of your fund, there's nothing you can do about that. So the mutual funds and stuff that struggle in these time periods, it's really just the nature of the way the system works, not necessarily that they're bad investors. It's just if everybody starts pulling their money out of your mutual fund, you're kind of screwed anyways.
Yeah.
But that, you know, that's why Buffett's like, I'm not doing funds. He's like, you know, I'll make Berkshire and do it that way, and then you can invest in my company if you want, as opposed to, you know, and he's proven it time and time again that that's the better way to do it, which I'm surprised more people don't take that approach. But I guess they're also not going to call out businesses quite like Buffett does.
Yeah.
But
Dayne, Vox is saying, in terms of the USEG CEO, he's buying at over $1 at consistent intervals. There could potentially be an insider trading reason. There isn't a large change in the purchasing. Yeah, that he's a bit limited, maybe.
true, probably.
Yeah.
Yeah. Which, like I said, no matter what, it just shows me confidence when I see a CEO just keep buying like that. And if you read the last few calls in their quarterly reports, they sound bullish on it. You know, they're excited to get the the drills up and running, the new ones. There's 2 or 3 that are hopefully up by mid-time this year, and that'll start to give real production numbers on the helium wells. So. And by the end of the year, we'll have a really clear picture of how the wells are performing, how good those actual wells are in terms of, you know, output in the quality of helium that comes out of them.
I saw they have their next earnings report in the beginning of May, and I'm assuming in this environment that they're gonna miss on that too. They missed on the last one pretty negatively. But it did actually go up a little bit in the days after that one. So yeah, maybe just track this one is the smart way to go here for a little bit at least.
Well, and I said, you got to remember, USEG is pivoting their business. So their oil and gas numbers are down because they're starting to get out of that business. So there's going to be a time period here where, and this is why we always say it's important to know the business, not just look at the numbers.
Yeah.
Because if you just looked at the numbers here and you're like, it doesn't look like they're producing as much. Well, yes, because they're getting out of oil and gas and they're switching over to helium and there's a transition period. So, you know, this is why, more importantly, when you're looking at the numbers, like clean balance sheet, cash flows, you know, like those are 2 things that I guarantee if you just invested on those 2 things and you only invested in companies with solid cash flow and clean balance sheets, you'd probably do pretty well.
Yeah.
You know?
Yeah, and maybe add on like a competent management.
Well, yeah, obviously. You want the business. But my point being is even an incompetent management team, I'd rather have them in charge of a great company than one in a bad company. You know? A bad company, if you have bad management, will go bankrupt. A great company with bad management can kind of weather through it. So, I just wanted to pull up the numbers here. It's been a second since I pulled them up. And I know it's down, so it's not like it looks like amazing here. But if they can pull around these numbers, and like I said, more importantly is the balance sheet numbers. and I bring over to this section here. They have just excess cash, and they only have no, don't do that. Don't do that. Total debt's $1 million. And that's including all kinds of stuff in that number. That's not just like regular debt. Liabilities include a bunch of other things as well. So that number, don't worry that it's 13. But my point being is they have basically no debt due, in their short term, and they're sitting on cash, and they're building new wells and stuff. So this cash flows are going to increase. If this EBITDA all of a sudden flips to positive, and I know it's EBITDA, but EBITDA will be the first thing to show, and cash flows will start to turn all at the same time. Then you'll start to see earnings finally increase.
Yeah. But then also just a clear, positive future guidance on one of these coming calls can be enough to, that the stock is starting to turn properly and it gives momentum and stuff like that.
Well, and one thing I've liked in the calls is they haven't blatantly come out and said that the numbers are going to be really good. They've just basically said that on everything that they're looking at, things will improve. They just want to get these first few wells out there before they start giving any kind of solid numbers on things. Yeah. And I kind of like that because I don't want them to come out and say, we think production's going to be here, and then kind of fall short of it and then, crash the price. I think the smarter thing to do here is, wait, get some solid first numbers, and then start to say from there where they think things are going to go.
Yeah. This is a bit of a joke, but the point is still solid. Alto management in Q2 24, they said, on the promise over deliver. That's what they didn't do that.
Yeah, they got to actually follow that. Yeah,
but that's, if they can do this, which is probably what they do, they're taking the expectations down a bit, and if they start to deliver and start to comment on future results, if this is still below or around $1, then it's gonna take off a bit, I think. Yeah, and it has the history. You see the spikes up to, what was it, $6 and stuff like that. So it has a history of these one-day spikes. So it has some momentum behind it when it first starts to move.
Yeah, for sure.
If they have low revenue or negative cash flows, you have to know why. Are they investing money in a lot of equipment? If so, that's usually a good thing long term. Usually that equipment will produce value eventually, but it looks bad on balance sheet when it's purchased. Yeah.
Yeah, and it's part of understanding cyclical businesses. When CapEx is high, it makes everything look worse. But that usually, like you said, leads to production. Cyclicals are always tough because you always want to buy at the opposite of what everyone thinks.
Yeah.
Holy smokes, it's slow today.
I think
everybody's searching deep value today. I bet that's what it is.
I saw in my fundamental sheet, I also have to update a few things now because I get some errors, so I need to do that.
I think having my market strength one is overwhelming my computer here because it's running slow. Normally it powers through this pretty good.
Yeah. Which one are you pulling up?
Just NUTX. I just wanted to see how their last numbers compared.
Oh, yeah. I can see what I get here.
I still can't believe it hasn't pulled up yet. It shouldn't take this long.
It's Sunday.
As soon as this pulls up, I'm going to close the market strength one because I really don't care or need it open. Oh my God, I didn't even do it. I'll just switch off. Sometimes if I switch off to the other page. Sorry it's taking so long, guys. This is, I know, kind of crappy for the stream. But either way. Come on. Yeah, I noticed we said ECDA had really sold off. Just trying to think of some of the names that we normally have gone through. How's
They had a
SSRM
bounce
held
back.
up?
Huh?
How is SSRM held up?
They are below $10 again now, and the chart looks ugly, but I think it's still. I'm not doing anything with it. I think.
I mean, this
It
actually, this might give a buying opportunity again to kind of, because like, you know, you and I both thought this was going to head back towards like $15 or 12,
yeah,
somewhere in that
around
range.
there, it's like, yeah. But I kind of, I'm still waiting on that news, like I've said 100 times now. So you know that's my thing with this one.
But I'm just saying, I think you might be able to see this one break out somewhere in here.
Yeah.
Just because this pullback is more based, I feel like on the market than it is anything to do with the company.
And I mean, if you go and look at the gold chart, Dane, while you wait here, it's not looking bad, you know.
No, not at all.
So it has been tracking that pretty solid. And okay, the last 2 days, gold is also down like everything else, but you kind of have to ignore a bit the last 2 days, right?
Right.
In terms of trying to interpret things.
Yeah. This is just pulling up NUTX. I just wanted to point out here that, you know, this is why just going off the numbers is tough. Because, for instance, last year, 2023, 28 cents in cash flow from each share. Today, 4.26 from operations.
Yeah.
So, I mean, that just goes to show you how well this is done. And then, you know, you look at a chart on something like this and, you know, you can just see what that does. This is, you know, trading at $5 and before you know it, it's $70. So, yeah, that's why, you know, if you are going to do deep value, make sure that you, as you start to hone in on these names, that you really dig into the quarterly reports. Because knowing what management's saying and where the business is headed is much more important than kind of always looking in the rearview mirror.
Yeah. My numbers are a bit messed up with them for some reason. So
well, it's been all over the place, and there was really only a few years of data, and they did a lot of share dilution, just because they were trying to raise money to get the business going.
What's your share count on them, Dane?
I had, I think, 5 million.
Oh yeah, because then that's correct now.
Rounded, whatever that is.
Yeah.
But yes.
Yeah. Vox is saying Wall Street bet thought everyone pulling data equals bullish. Well, you used to be on Wall Street bets a lot, Dane, didn't you?
Yeah, but it kind of, I don't know. I feel like it was a lot of fun during COVID and all that, and then it kind of fell off for me.
Yeah.
It became a lot of kind of nonsense on there. There wasn't a lot of like good names coming through. You know, it could cause like a one-day pop on names and stuff like that, but it was the amount of due diligence and stuff that was occurring on there had really gone down. You know, don't get me wrong, it's still kind of hysterical to watch people gamble some of the money. Oh my God, I can't imagine gambling like $100 grand on some of these names like people do. But you know,
and I feel like
try and strike a home run.
A lot of this now is like everyone is looking for the new GameStop or the new AMC or those plays. You know, everything is like let's squeeze the shorts and stuff like that.
Yeah.
I think that's going to be tough to find another one.
Yeah, I mean, you know, the original I think was Tesla on there. That was a big name for a long time. You know, and Tesla just murdered it on there for a while. NVIDIA was obviously a huge one on Wall Street bets. You know, usually bigger companies that have kind of that like growth potential, and the narrative does start to work out. But there has been smaller names on there that did really well. There was wasn't it like a satellite company or something that did so well? ASTS, is that what it was?
I think ASTS did well at least.
Yeah, ASTS was a name that was on there for forever. You know, and I remember people on Wall Street Bets putting a ton of money in down here at like under $3, and obviously we're correct. So now who knows how much of all the buying is well, I mean, it's got to be institutional if it's that much money going into it. But
Yeah, it has.
but either way, I mean, these are, you know, there is still some good due diligence being done on there, because some of these names do work. But that's why I said too, like with swing trading, I see this name as soon as it starts to take off. So
Yeah.
It's just one of those.
And Voxy agrees. He's saying like, yeah, when the sub got hugely popular from GME, it kind of fell apart.
Yeah, I will say, you know, the memes on there are great. It's always been something that's got me on there and enjoyed. But
and when RK came back a bit, that was also nice.
that was pretty funny actually. The whole scenario happening. I mean, now it's been a year almost exactly since that occurred.
And we felt it a bit on the stream because of our BNED situation, right?
Yeah. Oh yeah. That was when BNED was in the forefront for us. So
Yeah.
it's been a year. It's been a big change in everything. But
Yeah.
But once again, you know, I mean, it's living through some of these market cycles. It becomes interesting. You know, this is a very unprecedented time period for us. You know, besides COVID. I mean, COVID was the only thing that, you know, don't get me wrong, obviously I lived through the great financial crisis and the dot-com bubble, but I wasn't looking at markets. You know what I mean? I didn't care at all. I had no clue about markets. So it is wild to think about. Remember RFK for like that morning, or not RFK, oh my God, RK. He was like a billionaire for a second on the overnight because of his options.
It was just laughing when the share price started to attack. It was just laughing.
Yeah, but I mean, if you have, you know, hundreds of millions of dollars, it doesn't really matter at that point, I think. But it was wild to think that this guy made over $1 billion for some period of time off GameStop, and that is just such a wild thing to think.
Yeah, imagine if he now in this correction starts to stream like normally again.
Oh man, you imagine right now if he came out and gave you deep value names.
he would turn the market a bit, you know.
Yeah, every one of those names would take off. I'll tell you that.
Yeah.
But yeah, it's kind of a curse of his own success there.
Yeah.
But I don't know. He's inspired us to take everything on.
Oh, for sure. And I think like from the last stream he had was a bit different, right? It was the same. The chat was just going crazy. There's impossible to have that connection with anyone. So, and I'm sure he doesn't use the sheets anymore even. And he seemed very focused on just GameStop, and I'm sure he has contact with Ryan Cohen.
Yeah.
Because he tweeted something about Chewy, right, for a period too.
Yeah, I think he had hopped into Chewy for a little bit, or it sounded like he had. But
what you can learn from that also is that a very good skill that he obviously has is to adapt to the situation that he is in, right? He goes from having 100 names to one ticker. And he even said like on the streams that maybe it's not, you should spread it out. And that was unusual for him. Usually had around like a few to 20 names maybe. So if you look at his history, he has been able to adapt and change his style according to his situation, which is also a skill, I think.
Well, and the other thing too is if you're diversified up to 20 names and you're holding for, you know, at least a year or so, it kind of helps, because if there's a few names that are down, you're much less likely to feel like you need to sell out of those names when they're struggling, when you have like 2 or 3 other names that are doing really well. just because they offset each other. So, all you have to do is make a couple good calls, and then the other 15 can kind of stay even. And if you have like one or two that like really crash, it's not the end of the world. You can kind of trim those, or you can average down a little bit on them if you want, or just wait, because some of those names that drop so much, they end up recovering. So it just kind of depends. But I think that's why the focus on bankruptcy is so important.
Yeah. Vox is just saying like, yeah, probably why he can't. He would move the market too much. I think so.
Yeah, I mean, he does have a huge effect on markets. Now, I don't know, even in this kind of area, I think retail might hop in with him on some of these names, but it's a bearish time when institutions are selling as much as they probably are right now, especially mutual funds that, like I said, people are pulling money out of their portfolios, probably out of nervousness. When you have every news outlet out there basically preaching that it's the end of the world, it's not. It creates such a pessimism, and the average person has no clue what's going on, so they just get nervous.
Which is natural also, but it's just how it works, and that's also fascinating, and that's why swing trading also works, right? The entire psychology of the market, and the fact that it's human people, like human beings behind everything.
Yeah. Oh, the human psychology. It doesn't matter. The reason why the markets can't be truly efficient is because of human psychology. Right? Just that alone, the fact that it's not a computer doing all the buying and trading, it's all has to do with, people making these decisions.
Yeah.
It's why the markets are so good at what they do.
Yeah.
In the long term, the markets are right.
Yeah. Yeah, that's true. And if you read the books about swing trading now, they kind of all the successful ones, and Kulamagi also, and I know Livermore, they say the same thing. Like, if you go back and do the research and the studies from the charts, to forever, you will see the same patterns occur again and again. And Livermore, at least, he said that that's 100% because that's how the human mind works.
Right.
Voxy is saying if humans weren't involved, it would be much harder for us to find opportunities. Yeah.
Yeah, it would definitely ruin it.
Yeah.
Yeah. When the robots take over, it's not going to be as exciting.
Watch what you are saying, Dane, please.
No, I'm just saying, like once the robots are over, it doesn't matter what we say. We already can't do anything.
We do not want more beef with the robots.
Yeah, as of now, I think the robots are the best thing ever. But what was I gonna say? I can't. I gotta get going here. I can't stay too long. So my point being is, what I want to do over the next week is go through the names here, and then probably in the Discord. I think that's probably the easiest way. We can start to post the names that we like and what we like about them. And take it from there.
Yeah, we have a channel there called Ticket Suggestions or something. Maybe we can use that for just posting tickers now, and people can comment, what they see about them.
Yeah, so same thing. If you guys want us to go over any tickers, because probably the next few streams, unless things really turn around, which I feel like no matter what, it's not like we're going to see a huge recovery here. I think we might move sideways somewhere in here.
Yeah.
Obviously, it's going to be volatile for the next probably week at least. So you're going to see up and downs here. But during this time period, we'll probably just I'll try and have at least 10 names that we can kind of go through, and hopefully find some names that look good down here and could show a path to recovery.
Yeah, I think that would be good for the stream also, and we can promise you that when things starts to turn more bullish, we will focus on the swing trading. It's not going to be any doubt, because it's probably going to be a lot of opportunities. So then we're going to have a lot to speak about. But in the last, what is it, like 4 streams or something, it hasn't really been a lot of topics, right? Other than that, the macro environment is so uncertain right now.
Well, even to your point, like the past few weeks, we still kind of have focused a little bit more on swing trading just because, yes, the markets had pulled back, but this wasn't anything crazy. But now we're starting to get into value territory. Like this is a real drop. You know, who knows how long it lives, but this is the point where you're going to start to find good companies thrown out for no reason. And unheard names that are starting to do well that no one's looking at, you know, and volume's going to be super low on some of these names that have a good narrative behind them. So I guess that's part of it, you know, in terms of, you know, I guess our style will kind of shift back towards value and deep value in this time period. And then as things start to recover, go back towards swing trading because, you know, when you're at the top, swing trading's faster and it makes money quicker. But down here, what's up?
I don't mind that at all, but eventually, hopefully, because I see people are shorting a lot of things now and are very happy that the short went really well and stuff like that. And I was thinking, like, before this 2nd of April, Dane, it looked a bit easy, right, to start to short things, right?
Yeah, easier said than done, but yes. But I will say, yes, if my portfolio was a little bit bigger, I would probably start trying to short some names here. I probably could have. I haven't done it yet. Maybe what I should start doing is just taking like one short or something like that. I'm not going to do it in this because we've already dropped so much. I don't want to try and, I'm not trying to find the bottom now. But in this initial pullback, it would have been a good time to throw some shorts in there. So maybe that'll be the cycle going forward. Is right now we'll be in the deep value and value names, and as the markets recover, we'll sell out of those and go back into swing trading. And then when there's corrections, we do shorting until it's a big correction, and then we switch back to value.
That sounds like if that's gonna if it's gonna end up like that would be good, I think, because I miss the deep value style. I think we have mentioned that before, but I love the swing trading style. But I also miss going through numbers and stuff like that because, you know, we are a bit sick in the head here.
Yeah, I mean it's a hobby for some reason. Not even a hobby. I mean, this is really more of an obsession. I mean, I spend way more time on this than most people do a hobby.
Yeah, for sure.
It's tough to even call it a hobby at this point. So
Voxy is saying just like, we might get a little recovery on Monday, but think everything's going to be pretty sideways until we learn more about the tariffs response from other countries and especially Europe.
Yeah, there's so much uncertainty right now. I mean, and if you think, like I said, and I don't know how much is true, but it's, I mean, apparently there's almost $10 trillion that needs to get refinanced. And if we have lower interest rates, it would be a huge benefit to the country to get that interest rate down right now. And I think if you have someone like Bassett in charge, or at least whispering in Trump's ear, he might be saying like, listen, like if you want to refinance this debt, you got to get that interest rate down. It's super important we do. And maybe once that goes through and they refinance, then you start to see them change their tune in ways. But I don't know. I have no clue. It's just, we'll have to see. But all those different things, whatever one occurs, it could have drastic effects on the market. So so we'll see. One thing I'll say is everybody out there who's really panicking right now, just try and relax. These things happen, things change. We're all gonna be fine. It might hurt in the short term, but and if you're a hedge fund that just blew up, then that sucks. But other than that, you guys should know better. You shouldn't be that over leveraged.
Yeah, no, but that's what it gets down to though. Like, if you made some mistakes now and lost some money that you shouldn't have lost or that you can't afford to lose, the mistake has already been made going into the trade, right?
Right, and
you took on too much risk, and then that's what the lesson's gonna be. Like, put some money aside that you can play around with, but not. At least that's my thinking. I'm not going to advise anyone of anything, but I'm not going to spend more than I can afford to lose. That's just period.
Well, and like I have a long time period for my longer term portfolios, which is why I don't really care that I didn't pull my money out, because I'm like, whatever. On those few that I didn't pull the money out of, they're going to recover at some point. I don't care, and in the meantime, I'll be averaging down on them. So I don't really care about those portfolios. I have a long time, and if you were someone who's close to retirement, and like it's kind of hits you harder, you know, I hope your fiduciary, whoever it was, had you not totally in stocks right now. I mean, that's not really a smart idea towards the end of your path there. So that's why you should be diversified and have different things and not just be totally in the markets. And even if you are totally in the markets, they'll probably recover and you'll probably end up being better off than if you had diversified anyways. Because
if you go to the, you don't need to do it on the stream. I'm just telling if anyone who will watch this, if you go to the indexes and zoom out, just keep an eye on the graph and see how it looks like.
I mean, we talk about this a million times that like, you know, sure, this doesn't look great because we're back down towards basically what we were a year ago, but zoom out to like a 10-year monthly. And like, I mean, there's been these dips occur all the time. And like, do you remember in 22 and 23, you know, everyone freaking out? I don't. Yeah. I mean, I remember, you know, it going back down, and this was after a huge bull cycle, but doesn't this look almost the exact same?
Yeah. Yeah.
I mean, what's different between this period and this period? Because to me, it looks very similar.
That's more than a year also in that down period.
That's what I'm saying. We were down. We were in a down period for over a year, and like there wasn't the same level of panic you see. So that's why I said like the news kind of it sucks because it makes it so much worse because everyone just like it's just so thrown in your face that everyone like kind of overreacts to this stuff.
I think, Dane, I was meant to ask you this a bit earlier. I know you have to go, so if you don't want to answer it now, we can take it another time. But I speak with some people that are convinced, and I'm asking because I'm curious how the perception about it is over there where you live. But I speak with a lot of people that are convinced, like Trump, he has no idea what he's doing. He doesn't have a plan. He's just like doing stuff, and I'm having the view like that he is better prepared this time than the last time at least. And for me, it seems like he has a team around him that what I'm trying to say is that to me, it comes across that he has a clear plan and that he's acting on the plan and that he was very transparent about what that plan was going to be moving into the election.
Yeah.
How is the perception over there where you live?
Well, yeah, I don't want to get too political here, but just my perspective on politics is always kind of from an outside perspective. I don't take party lines. I just watch as things occur and make my own decisions. And in this country, as you can tell, it's quite divided. The far right and the far left are hardcore on their sides, and in the middle ground, where I think most Americans actually stand, it just doesn't sound like that because you really hear the extremes way more than you hear the common sense in the middle. And the problem is because of the way American politics work is if you disagree in any way with your side, it gives credence to the other side because they just point out the fact that that side is wrong. Everyone's wrong at times. And the reason why, for instance, like if you're a Democrat right now and you hate Trump and you think that it's the reason that he's failing is because, you know, of all his choices and whatnot, the reason why Trump's in power right now is because the Democrats, which basically stand on like kind of a larger government, and I'm just kind of generalizing here, but just if you think of it like this, Democrats stand as like, you know, they larger government, the tax money goes to kind of balancing out the wealth gaps. They fund big projects that make infrastructure and things better throughout the United States. But the problem is over the past, you know, probably 15 to 20 years, their policies haven't actually done that. What their policies have done is money's disappeared. We haven't really seen projects actually come into place. All their policy seems to be more on restricting economic growth, but never increasing the supply side. The latest Lex Friedman podcast with Ezra was a good point. Their book Abundance, they talked about the fact that they're never focusing on the supply side and growing things. It's always on limiting things because of environmental factors and things like that. So you get Trump as a response to the fact that what the Democrats have said sounds good on paper, but hasn't actually played out in real play. And now you get the other side where you get Trump in there. And there's diehard Trump fans, and then there's also like kind of a mix of like centralized Republicans. And they want to see the change because, like I said, things haven't been going well. And we don't know how this is going to play out yet. we don't know what Trump's policies are, and Trump is always fired from the hip. He has always been someone that, yes, I will say he has came in and said he was going to do all these things. So anybody who didn't see this coming for some reason, I don't know what to tell you. He said that he's going to do these things and he's doing them. Whether you think it's right or not, it doesn't necessarily matter at this point because he's in there doing it. So we'll have to see what the fallout from all this is. But
Dayne, I even saw an interview with him, and I'm not taking any side. I'm not going to speak from one side or the other. I'm just curious about how, because for me it's like you. I don't know what to tell anyone that think he doesn't have a plan, because I even watched an interview with him before the election where he said tariffs is my favorite word.
Right.
So it's like that was pretty clear, at least to me, that he was going to act on those things that he promised. And I mean, if you go and look, he won with record numbers, right?
Yeah, and it ended up being a little bit closer than it initially had looked, but it doesn't really, none of that really matters. What matters is he's in there. We're trying this whole tariff type way of changing things. Yeah. And it could work out, it could fail, but we don't know. And to be honest, at this point, I think it's worth trying something different. Do I always think Trump's doing it the right way? No, I don't. I wish I could say that I liked everything that someone does, but it's really hard to do that. Every politician I find, I agree with them on things and I disagree with others. And like I said, the tough part is most people have to take their party lines. So regardless of what Trump says, they're just like, he's great. Or regardless of what Trump says, they say he's the worst person in the world and, he's going to destroy everything. And that's just because that's kind of how politics has to play. The left can't give credence to the right, and the right can't give it to the left, because if they do, it makes them sound like they're giving the other side a chance to come back. The winner-take-all mentality in in America in general, because of the way our voting system works, is at the heart of the issue. And to be honest, everyone always puts so much power into the presidential arm when really that power a lot of times sits with Congress. But throughout both the past few administrations, and actually even going back as far as probably Bush, Bush Jr., or the second, or whatever his title is, executive power has increased because basically Congress hasn't been doing anything. We basically get nowhere. So the executive branch keeps kind of adding power to themselves because they're just like, well, nothing gets done if we don't do something. Yeah. So we'll see. I have no clue. I don't really worry about it in terms of trying to figure out who's right or wrong. It's just watching as things occur. Yeah. I've always said this about America because you can look at our history. Things have to get really bad before we change. It's just how it works. It's a slow system. But when things really do hit the wall, that's when actually things change and improve. Yeah. So I always find some of the times it's like the darkest hour is the best time for America, because when things really start to fail, that's when everyone steps up in this country and everyone starts to care, because we only let ourselves fall so far before we begin to really cause change. Yeah. And it's part of the reason I think the system's worked for so long. And it leads to these boom periods where you have some really struggle. You have some times where you struggle, and some times where you watch everything succeed and things really look optimistic, and you can go back. I mean, you could go to the Great Depression. You think anybody in America thought this country was doing well? No. But we came out of that and we were fine. You go into the 70s and the oil issues and the inflation during that time period. And I'm sure everyone thought things were falling apart then. And we made it through. I think the past 20 to 30 years, we've been kicking this can down the road of our debt problem ever since kind of Clinton left office and the budget was supposed to get balanced and slowly fell out of that. I think that was the last chance. And also I'm critical on Clinton on creating some of the trade acts he created, because it did sell out the manufacturing side of the country. So I think it's important always to have a balanced perspective. I think, to be honest, if you really took a poll of most Americans right now, it's pretty split. I think everyone's kind of nervous on both sides because people want change, but they don't want bad change. So all change is scary because you just don't know. Yeah. So we'll see. I I'm always optimistic. I'm just an optimistic person. I think things will work out just fine. There's going to be rough paths, but yeah, we have to do something.
Yeah.
You know?
Vox is just saying also he is also in the US and he agree mostly with what he said. The plan has been in place. If it's a right plan, we just don't know yet. I'm not a Trump fan personally, but I recognize he has some smart advisors. So yeah, okay, that answered my questions a bit because yeah, I have struggled a bit to see that there has been no plan and he's just like doing stuff, you know. Obviously, that's not exactly what they mean, but it's like. To me, it just seems like this came as a surprise to too many people that I didn't think it was that big of a surprise. And then you can, of course, argue the percentages and stuff he operates with, but yeah.
Well, the one thing I'll say, and I said this kind of since the beginning, I feel bad for people who really only listen to like legacy media. If you just watch the news here, and that's your only perspective, I can see why you're so blindsided by things because you're missing a huge swath, social media and all that. I know a lot of people on the left consider that all just nonsense and they would never listen to it. But you have to respect the fact that there's, you know, there's like 10 times the amount of people using that stuff versus old legacy news. So if you're getting your news from just like the regular news channels and stuff like that, and like besides Fox, I mean, everything else is just to the left. So if that's the only place you're getting your news, I can see why it's so dumbfounding to you that everything doesn't seem like it's going your way because everything said it was going to go your way and then it didn't. So it's just tough. You know, I do feel for people, but at the same time too, I think it's to your own detriment to play ostrich and stick your head in the sand and just be like, no, my way's going to go. Everything's going to go my way. Everything's going to be how I want it to be. I think I know what I'm talking about. You know, it's kind of like how we were joking about before. Everyone's an economic genius right now and knows how this is going to play out. Yeah. You know, as soon as I start hearing people tell me that don't know anything about economics, how things are going to go, that's how I know it's probably going to be the exact opposite of what they're saying because they really don't know what they're talking about. I wouldn't have listened to them any time before now, and I definitely won't listen to them right now.
No. So is Jim Cramer on that list?
Oh yeah, inverse Jim. Statistically, that's the way to go, and that's how that you know that you want to look at what works. Go by statistics. Look at how things look. You know, I mean, it is what it is. But I think the best thing everyone should do right now is don't panic. Just try and just watch how things work. We don't know yet. If Trump's wrong and the tariff thing doesn't work out, in 3 years he's gone. And I know he's talked about doing a third term, but I can guarantee you there's no way anyone will pass him to get into a third term. There's no way. There'd be way too much opposition to that. We've gotten rid of it. It's in the Constitution. You only get 2 terms. So it's not going to happen. You can say what you want. It's not going to happen. So
but also, how old is Trump? He's soon 80, right?
Yeah, but I will say there's a difference. You know, I don't want to poke at Biden too much, but you know, there's a difference between a Biden and a Trump. Trump is definitely more coherently there than Biden
like
is.
If he's serious that he's going to try on another term after this, he's going to be very old, you know.
Yeah, and I just think I think it'll be good for American politics to finally not have Trump in the spotlight. Regardless of whether you like the guy or don't. I think it'll be good. It'll be refreshing to most of the country to finally move on because the big thing is I mean, you look at like I think the Democratic approval rating is at 21%. I saw last. I mean, that's like almost dissolving the party. Like there's going to be new parties that come out of this because that's so uncoordinated and so low, and there's no voice that leads that party. And then to see where you know. The Republicans, though, could fall apart if this doesn't work out. You know, I mean, if this tariff policy in their strategy right now doesn't work out in the long run, and it's going to take time. You know, we won't know how these things work out. You think manufacturing is going to come back to the U.S. in the next month? No. It's going to take years. So you know, maybe in 4 years, all of a sudden we start to really see jobs change and things like that. But you don't know. So you know, like I said, this has become a political rant, which I try not to do. But as always, like I almost see it the same way as I see the markets. Like I sit back and I watch. I see how things work out. I try not to make extremely formulated opinions because I don't know. And if you say you know, then I have no faith in what you think because you don't know.
Yeah.
When I see
Yeah, you
brilliant
need to
people
work
from
where
both
you-
sides economically talking, you know, and they're the smartest people and they have probably the best education and history background that you could, and they're in disagreement. You know, that just goes to show what does an average person like me have just besides trying to just see it from both sides. That's the one perspective I think you can take that will allow you to at least appreciate kind of where we're at.
Yeah, but as always, then you need to do a little bit of extra work, right? To gather the full picture and form your opinion based on good information. You know what I mean?
Yeah, and I've said this too. You know, I give kind of the average person also the benefit of the doubt because most people don't have the time or they just don't even care enough to look into it. And if you don't, I understand if your opinion gets formulated pretty easily because to be honest, most people are just looking for someone to give them an answer.
Yeah.
So that's all I have to say about that.
And if you want the answer to everything, come to the Laughing Stock.
There you go.
I think
Not
that's
financial advice. All right, that's all I have to say there. We'll see. Who knows where this market's going? This is going to be an interesting few weeks here.
Yeah. No, for sure.
But
yeah.
All right, yeah, we'll get to some names. If you guys have ticker suggestions, please throw in the Discord or post on YouTube, whatever. It doesn't matter where. We'll try and get to those next week. Other than that, I don't think I have anything else. How about you?
No, same. I think I will. Look closely for deep value names this coming week.
And here, guys, I'll zoom out even further. Does that make you feel better? Everyone feel better now? This is the 20-year monthly. All right, we're doing fine. Things are up.
Print it out and hang it on your wall.
In 2009, we were worth 1,000. This is the NASDAQ comp. This was only at $1,000, and now it's at 20,000. Okay, that's wild. That's wild. We're doing fine. Everything's fine. Yeah. Just let some time go by.
Yeah.
You know, it's hard to even imagine that this kind of run up can occur. Like this is mind-boggling to me if I look at this.
And that is with a lot of different precedents also. So
this is a huge span. I mean, it's 15 years, but it's a huge span of time. And I mean, and I say 15 years, but obviously it was leading up to this that caused this great financial crisis. So, you know, remember, the economy was great here, and then it wasn't.
Yeah.
You know, the economy was great here, and then it wasn't. And then the economy was great here, and then it wasn't. So, like, it's don't overreact to everything.
Yeah. Voxy was saying, nice, we'll try to catch you all next time. It was nice to have both Value and Voxy in the chat today. I got some conversation going. That's always nice, I think.
Yeah, always appreciate all you guys joining in. Yeah, we'll get back to Value because I really think that's the spot to be in right now.
Yeah.
All right.
All right.
Everybody, enjoy the rest of your week.
See ya.
See you, everybody.